At today's LendIt Conference in Midtown Manhattan, former Treasury Secretary Lawrence Summers spoke to us about the importance of the new lending economy in his keynote address. Hi, Mr. Summers. How are you today?
Good to be with you, Janet.
So, Larry, you spoke a great deal about the importance of the reduction of risk, that technology in the new lending economy would help reduce risk, reduce frictions. Can you tell us sort of what you view as the most central factors that help reduce risk in that economy?
I think the reduction in risk comes from a few things. Ecology and experience teach us that resilience comes from diversity. And a financial system with more different types of institutions is going to be a more resilient financial system. Experience teaches us that when more information is brought to bear, decisions are made more wisely. And the use of information technology and combined with big data will permit more information to be brought to bear on credit decisions. Experience teaches us that taking frictions out of a financial system means, yes, more profits for the entrepreneurs, but much more importantly, with competition, means higher returns to savers and lower costs to borrowers. And that's what's going to happen from reducing the kinds of frictions that the traditional banking system has carried for a long time.
So borrowers are certainly benefiting from this new lending economy, but traditional lenders are also playing a significant role. As you know, LendingClub earlier this week announced a partnership with Citi. Can you talk to us a little bit about what you view as the evolving relationship and role of the relationship between traditional banks and new lenders?
I think it's very much a work in progress. Andy Grove, some years ago, coined the term co-opetition to refer to situations where there were elements of cooperation and there were elements of competition as well. Obviously, to the extent that innovative lenders can reach constituencies at lower cost, that may over time represent a competition with banks for that business. But it is also true that there's a great deal of scope, as the LendingClub Citigroup announcement demonstrated, for cooperation between these institutions.
Let's talk about the regulatory environment for just a second. You spoke a great deal about how you feel regulators should respond to the emergence of new online lenders. What are some of those basic regulatory principles that you think are most important?
Look, I don't think that new businesses should be built on escaping regulation. There are plenty of great opportunities in this world without any reliance on regulatory arbitrage to find new ones. At the same time, regulators have to be careful not to fall into the habit of a presumption of prohibition rather than a presumption of permission. And they need to pursue an approach of trusting and then verifying to make sure that online lenders, platform markets are really functioning in the interests of consumers. I think a particularly important principle is that the same rules on disclosure, on fair lending, that have applied to traditional lenders need to apply to new lenders. But at the same time, when new lenders solve problems like capital that have traditionally been substantial problems for mainstream lenders, that needs to be a basis for respecting them, not a basis for seeking to impose new regulations on them.
Market share of online lenders is still pretty small. What do you foresee as being the biggest factors that could catapult that market share forward?
I would say, as a general rule with respect to technology, things take longer to happen than you think they will, and then they happen faster than you thought they could. And I suspect that's the way it will be here. And my guess is that you're going to see exponential growth for some years now in this sector. And of course, it's a feature of exponential growth that 1, 2, 4, 8, but then it's 64, 128, it doesn't feel like much is happening at first, but then after a while, it feels like huge amounts are happening. And I suspect that's going to be the way it is with respect to platform lending.
Mr. Summers, thank you very much for your time with us today.
Thank you for the chance to be with you.